So massive thanks for joining myself this morning. Just I read Sam's note on the WhatsApp group about my muscle fest. Yeah, I wish they were. I am following what Grace has given me some push-up work to do. 10 push-up challenge. So a few challenges are, of course, there's lots of business challenges, people creating challenges online as well. Let me just go through my slides very, very briefly. So let me just share screen and then go into my slides. And let me just show you the agenda. So we are in record mode now. Let me just go from the beginning. Okay, brilliant. So just a little bit about myself. BQueen Events organized over 200 events in the last decade, monthly events. Virtual is something which I have not specialized in whatsoever. So Aura Architecture, Connection, Crowd with Us, Ronald Fletcher Baker are my monthly sponsors. Just the agenda here from our sponsors. Finance. Sorry, there's no. It says finance update. There's no actual finance update, but we will include a finance into the conversation. So what we cover, I think we're going to do it in a slightly different order. No, development, tenants, and funding, risks and mitigation. Delighted that Ranjan and Anil have joined us as well. So Alex is from Sillence Hurn, Chartered Surveyors, Catalyst Interiors of Pamela. Daryl is from LendWell, formerly from Shawbrook and formerly Barclays. Delighted to have Suzi Carter, Strongoak Investments, who was at the Commercial Summit. Sam from Bond Finance. Anil, who's accountancy background, but also commercial investor for the last 35 years. Ranjan Bhattarcharya, I don't think Ranjan needs much of an introduction. Commercial investor, Baker Street Property Meet as well. Have I missed anyone off there, Jack? Possibly. We'll come back to yourself. During the Q&A, if you want to ask a question live, and I'm muted to the panel, so you can unmute, but I prefer if you can just use the chat box, raise your hand as well. Recording the information, so please be sensitive of what you say. I'm going to share this online afterwards, so please do so. Please be civil during the event, because it's a very tough time for all, to be fair. Look, this is a little bit about EXP. Jack, do you want to say a little bit about this slide?
Yep, thank you, Brendan. I wasn't aware you put this in, but EXP is an SME property development business based in the southeast of England. It's myself and Ben Richards partnering up, and Ben runs Aura Architecture, who is one of Brendan's sponsors. This is one of my slides that's about how someone may be able to work with us. That's pretty much all I have to say at this stage.
Okay, brilliant. So you can sign up to receive my newsletter, fairly easy, bqueenevents.com. Sponsorship opportunities available. Join our team. The team is for questions on Thursday evening for starters. So Thursday evening I have a property quiz. I'm still open to rounds being created, particularly on commercial sector. So a little bit about it. You can join it online this Thursday evening. A little bit about Jay Howard, who's helping with the questions for Thursday evening. JMP Art from Your Property Auctions. Jay, are you on this call? No? Okay. He should be, but
he's not yet, no.
The benefit of being early. Daryl, do you want to... Sam, I still could not get your slide, so sorry, apologies. Daryl, do you want to explain this slide? This is probably the more important one than the second one. Oh, Daryl, oh, good. I have to unmute you. Unmute. Daryl, do you want to explain this slide? So I know some of these people, Stephen Johnson, Karen Bennett, yourself, but I have to admit I don't know the four other particularly well. But do you want to explain?
Yeah, thanks, Brendan. So this is the LendWell team. So we decided to launch a lender a couple of months before the coronavirus hit with impeccable timing. But whilst that might cause some interruption in the short term, in the long term, we're very much looking for the same thing, which is to meet anyone really looking for project-based lending. So we do bridging loans, fast money, auction purchases, this kind of stuff. We do property sales loans, which is something I think people might need over the next few months, which is where if you built a development site and you run out of time for whatever reason, or it's taking longer to sell for whatever reason, we can refinance your development loan and give you more time, potentially release more capital. And we fund refurbishment and kind of small development, so things like HMO creations and commercial to residential conversions, that kind of stuff. The team's really good, so it's small, but we all worked together for many years at Shawbrook. So led by Stephen Johnson, he was Deputy CEO of Shawbrook Bank and set the bank up back in the day. Karen Bennett, who was the MD of the property division, and the rest of us, apart from Jason on that slide, all worked together at Shawbrook.
So, Sam, I don't have a slide for you today. Apologies. I tried to get your slide up. So feel free to send it over to me. But a little bit about yourself, Sam. Or Sam? Or maybe I've got you on mute. Have I got you on mute? That would be handy. I'm still learning the system. Sam, can you hear me? No? Sam?
Yeah.
Okay.
Yeah, you sound a little bit like R2D2, but I'm guessing you said introduce myself.
Yeah.
Yeah, hi, I'm Sam Norris. I'm one of the senior brokers at One Finance. So we specialise in all kinds of finance, from sort of your standard mortgages through bridging, development finance, commercial finance, pretty much everything in between. I myself just specialise in working with investors and developers. So if you need a remortgage on your own main residence, probably don't come direct to me. I can get someone in the office to help you out. But for the last sort of 5 or 6 years, my 13-year career so far, I've been dedicating myself purely to helping developers over the next few weeks.
Sam, we're going to move over to Jack now. Jack, for the rest of the meet, it's I will chip in. Obviously, I will try not to chip in as much as possible. Let me try to put the video to you. Let me just end the slides. Did I miss anything off those slides as well? Not really. So this Thursday, I have a quiz, property quiz. Look, if there's feedback and response for another morning session, I will do a morning session as well. Let me not interrupt Jack anymore, and let me pin the video over to you, Jack. So over to yourself, Jack.
Thank you very much, Brendan. Sam Norris, can you just try and maybe get a set of headphones or something? Your microphone wasn't all that clear.
Yeah, I know, it's the best one I've got at the moment.
Oh, okay.
Sorry, mate.
No worries, no worries. You might just have to speak up. I'm sure everyone else hear you. But happy Monday mornings, everyone. I hope everyone had the best weekend that they had, including staying at home and trying to do what they could. So I believe the purpose of this panel and grouping together of this conversation this morning is to help everyone in their businesses during this unprecedented time. There's no rule book or education course or anything in particular at this moment in time to help businesses like ours in this time. So I think it's very key that we learn off each other's findings and workings to ensure that our businesses can survive or strive in these times. We have an exceptional panel that's got a very good range of individuals in certain areas, and Brendan's going to kindly hopefully pin people's screens and mute people at the right time. So he's more like the techie background guy, and I'm sure he'll throw in a Brendan interject from time to time. So today we're going to be discussing finance in commercial property, specifically tenants and the developments of commercial property. Evidently, we're going to be fairly focused on current times, as I feel that if we start talking about times that aren't here or times that have passed, it may be slightly irrelevant unless we can look at maybe trends and things like that. So panel, just be conscious that the listeners are predominantly listening for current times and coming times, and maybe trends that have happened before which may help us in these times. So if anyone that's listening does have any questions, please pop them in the question box that you can tap the bottom bar and put questions in there. We will go to a Q&A So just fire the questions in as and when. For now, to get the ball rolling, please just put your name in there and say good morning to everyone. It's good to sort of get your name out there and start the conversation. So to start off, we've already had introductions from Daryl Norkett and Sam Norris. If we could go through the panel on every occasion alphabetically and have a 20-second introduction, starting with Alex Hurn.
Cheers, Jack. So I'm Alex Hurn. I am a co-founder of Sillence Hurn Building Consultancy. We are a building surveying, project management and QS practice, actually based in Southampton, but service south of England and Midlands. We offer the sort of traditional services of project monitoring for lenders and project management for developers and investors, and then also traditional sort of landlord commercial property services.
Brilliant, thank you, Alex. And Anil, do you want to do a 20-second intro on yourself, your expertise prior going into the panel?
Oh, thanks, Jack. Yeah, Anil here. I've been a commercial property investor for 35 years, high street, big top 350 FTSE company tenants primarily, also residential. My background is accountancy practice.
Fantastic, thank you, Anil. And
Thanks,
we've had a brief introduction from Daryl, so we'll jump straight to Pamela.
Oh, give me 1 second.
I've done it. Hi guys, thanks Jack. Pamela from Catalyst Interiors. I'm working with Mike from Catalyst Interiors, who's been around for 21 years designing and fitting out large establishments. And I've come along to do other things like co-working, co-living projects. But we have got 21 years experience of designing for dementia and all that other support. So if you need any help and support with going in that area, please give us a shout. Thank you, Jack.
No problem, Pamela. Thank you very much. And Ranjan?
Hi, everyone. My name is Ranjan Bhattarcharya. I host the Beg Street Property Meet. I've been investing and developing properties for years, been doing commercial since 2001. We have a portfolio of retail let to mom and pop tenants, as well as high street big names, and also serviced offices and office suites as well. So really here to share what we know and what we have been doing to shore up our existing position, and also what plans we're making to prepare for the opportunities that are going to be ahead in the coming months.
Thank you, Ranjan. And last but not least, Suzi Carter.
Good morning, everyone. So I'm Suzi Carter. I'm now a property investor myself, but in a former life, relatively recently, I've been a retailer. So I worked for B&Q, doing development sites for them for many years, and I've managed big portfolios of retail warehousing and shopping centres where I've dealt with tenants a lot. So I kind of understand what's going on from the coalface of tenants at this time. Obviously, we've not seen times like this before, but I'm kind of really happy to lend my experience in terms of what I think is going to be happening from a tenant's point of view.
Fantastic. So that's the panel that we have. Evidently, Daryl Norkett and Sam Norris, who have already introduced themselves, are also on the panel. So we have a plethora of individuals from surveying, property investing, commercial owners, interiors, finance, landlord, etc. So I think we've got all bases covered for any questions that may come up. Our main three topics today are going to be tenants, finance, and the development. I think we'll try to do them in the order that they're under the most stress at the minute, which I believe immediately coming towards the end of March and the beginning of the first quarterly payment of Q2. I feel that, our business specifically, but there's been a lot of talk about what people are doing in these times for their tenants. There's evidently all range of sizes of tenants that you can have, and some are being impacted slightly differently. So starting with Alex Hurn, do you want to share what you're noticing with tenants and how you're dealing with them, and maybe from a surveying point of view, how you can logically approach this subject?
Cheers, Jack. Well, I mean, we work for sort of a handful of large sort of industrial private landlords who own sort of estates and an array of commercial buildings, and obviously how commercial rentals usually work is they're paid, like you've just said, quarterly. So I know one of our good clients, they've written to all the tenants and offered to pay sort of reduce the rental payments into monthly instalments to help the cash flow. And I think it has this scenario has, compared to the sort of previous financial crisis we've been in, it is there's a lot more sentiment in the market and understanding around. So I think that landlords will be a lot more understanding of the current situation, and I think in commercial property as well, rather compared to residential, your landlords will be a bit more flexible on the basis that the way they're set up, obviously they're usually in pension pots or pension funds, so it's not, so cash flow isn't as big an issue as for residential landlords.
Interesting. I agree with all
Can
that.
Go on.
Ranjan, you wanted to say something and go against my alphabetical order, but go on.
Sorry. I think it's depend how they're owned. I disagree, and I disagree for a number of reasons. Firstly, the government have given buy-to-let residential investors the ability to defer their mortgage payments. They have given no such equivalence to commercial property landlords. It is on a case-by-case basis, and it's whether the banks want to agree or not. What we have found, I mean, I understand that the average collection for this quarter, my lawyer gave me this stat, I don't know where he got it from, but he says the national average is about 30% of rents have been collected from this quarter's rent payment date. We have collected just over 70% of our rents. And interestingly enough, it's the mom and pop stores, because my strategy for investing in commercial property has been to always look for properties where there's a good covenant. And by good covenant, I actually like mom and pops to be UK homeowners and to be personally liable for the lease. And I also buy properties where they've got alternative uses. And interestingly enough, the 30% who don't pay, who haven't paid, are all big names who are just being bastards and managing their cash flows, despite getting fantastic grants from the government. And we have been very hard-nosed with them. You know, we've got a 3-month moratorium, and we're going to collect from you, and we're going to collect in full plus interest after the 3-month moratorium.
Yes.
If you don't pay, then guess what? We'll throw you out because we've got PD rights to make a flat in the back, and we'll be in a better position. So, and it's whether the likes of Costa want to lose 200k fit-out charges, and but if a landlord has a site which is in an area where there's no alternative use, and there is low other occupier demand, then then the power is with the tenant. If you've bought right, then the power is firmly with the landlord. So I think it's a different. I think the equation is very, very different depending on the power of the landlord, and that depends on the type of property they've bought in the first place.
I completely agree. It's a case-by-case scenario. I mean, we've got a tenant who's £600 above the small business rates relief, and only 18 months old as a business. So that tenant is really struggling because they're 18 months into their business. They've forked out for a fit out. They've forked out for the setup costs. Although us as a landlord are in a fairly strong position because it's got other uses, that specific tenant is pretty exposed as we speak. So moving on to Anil, thank you Ranjan for that. Moving on to Anil, what do you sort of see the position at the moment with tenants, and what could you offer as potentially advice for any landlords out there that are having issues or may come into issues subject to the Q2 payment coming through?
Well, it's interesting what Alex and Ranjan just had to say. To an extent, I agree with Ranjan, certainly on the ownership. I think you'll probably find that most of the people around where we deal with are going to be private landlords, family-owned companies owning portfolios of commercial properties. And cash flow is going to be a big issue for a lot of them, especially where they've got borrowings. I mean, the statistic that Ranjan threw, I can tell you our own personal situation. We've had 18% of the tenants, or commercial tenants, who have paid a quarterly rent, which is due on the 25th of March. And in terms of our total collection is 15%. We've only collected, and are likely to collect only 15% for this quarter. And
do you have a lot of big name tenants?
Yes. We've got all the big name tenants apart from one, and it's a charity. The charity was the ones who said we will pay. The others, the other big names, have all turned around a letter which, funny enough, all arrived around the 24th or 25th of this month. All basically said usual explanation and said, well, we're not paying. And one big name quoted company even turned around and just said, we will not be paying this. Words to the effect, we will not be paying this. It'll be a rent-free period. Period. Full stop.
Name them.
Pizza Express.
Pizza Express. Okay.
Yeah. They've actually said we're not paying. We expect this to be a rent-free period. Now,
Carl said something similar. Carry on.
Yeah. New Look, I think, have said the same as well. Now, we all know the lease terms of 21 days, and we can do whatever, but we've got a 3-month moratorium. Now, Ranjan said something interesting. He's right. Who's in control here? If you've got alternative uses, the landlord has. Don't forget, a lot of these commercial investments have been bought on old leases. Especially our portfolio, are all traditional 25-year plus leases.
Shut up.
Brendan, I think you've muted yourself and Anil there. That's strong from you.
Can you
unmute now? Okay, there we are. Is that better?
Yeah.
Okay. So with low alternative uses, the tenants know they're in control of these situations. So I think they really are pushing it. And most of them, some of them certainly can pay, but they're just trying it on.
Yes. Very
challenging times.
I mean, in reality, if you looked at those size of companies and said, can you cash flow your business for a month? 100% of them would have said yes. But what they're doing is they're nest egging their cash for next month and the following month. So thanks very much, Anil. Daryl, what are your views on tenants? I mean, evidently from a funding perspective, when it comes to commercial property, the tenant is pretty key.
Yeah. So it's interesting hearing Anil and Ranjan talk through their experiences there. So I think this is a classic case of can't pay and won't pay. So the big corporates have got people employed in order to kind of scope out worst scenarios of, how long can you survive for with no income and all this kind of stuff. Whereas the mum and pop shops, that'll be more kind of day-to-day planning most of the time. It's really interesting that people are not paying the first quarter's rent. There's no not paying the first quarter's rent. We haven't really had interruptions until halfway through March, so I find that quite interesting. I don't think that the mum and pop businesses will necessarily perform better in the next quarter, because I think there is this kind of willingness to pay because they can, but that doesn't necessarily mean they'll have the ability to pay in 3 months' time if they've had no income for 3 months, because they will have smaller cash reserves. So I think it's a really challenging time for a traditional commercial investment. From a funding perspective, it's very difficult to get commercial mortgage if you haven't got a tenant signed up, and you can't currently sign a tenant up. So there will be very little transactional activity of a traditional commercial investment in the next few months. There might be some people buying stuff cheap because they have a long-term angle in mind in terms of the tenant or in terms of a development opportunity, but traditional tenancy commercial investments pretty difficult to do right now. And I think really, I haven't got any commercial investment properties, but if I did, my focus would be on how can I add value to those mum and pop tenants? How can I help them get the money, claim everything they're entitled to claim in order so they can continue paying me? So that might be grants, but the one that I've spent a bit of time looking at recently is the coronavirus business interruption loan scheme, which is very similar to the old enterprise finance guarantee, which is something I've lent on when I was at Barclays. It's not as easy as turning up to the bank and getting the money. Some of these businesses need to do a fair bit of prep. You need to go with 2 years accounts. Those accounts need to show that you're profitable before this epidemic hit. You need to have things like your bank statements ready, tax returns, all this kind of stuff. And really, you need to be forecasting what your numbers look like after you come out of lockdown and you come out of this particular crisis period. For a lot of these mum and pop businesses, without the support of their accountant, who's probably not in the office, all this stuff is really actually quite challenging. So I think the more people can do to help these small business tenants put together that pack of financial information to go and approach their bank, more chances there are of getting that particular benefit for a loan.
Thanks very much, Daryl. I think that's the first real mention and the key element of what the government and what the banks are doing. The government's backing the banks, and the banks are supposed to back these smaller businesses. So on the topic of finance, I'm going to bring in Sam Norris to give a bit of an indication from more of a broker finance perspective. Sam, do you want to put in your 2 pence on what the market's currently at with tenants and finance?
Hopefully you can hear me a little bit better. I'll try and put the microphone to my mouth. Just following up on what Daryl was saying, actually, when we had the commercial summit not that long ago now, amazing how much has changed in such a short period of time. I wrote an article in there about Amazon proofing your business, and I actually used the example in there of a basically kind of a mom-and-pop style business, which was a dog grooming business, where one of my clients had a tenant in there that was a single franchise dog grooming business, and I, funnily enough, just by coincidence, spoke to that client on Saturday morning, and they raised quite an interesting point concerning tenants, because we've spoken a little bit about the big name tenants, and from a lending perspective, lenders always would prefer to see a Costa or a Pizza Express in these properties when they lend on them, because they see them as safer options. And it's quite funny, I think, how what we've heard already, and I think it's absolutely true, that actually that's not necessarily the case. And this was a great point that was raised by my client on Saturday morning, which was, he said, well, I'm quite happy with this dog grooming company, and you've got a few others that are similar types of the companies, and he's the one that actually mentioned the term Amazon proofing to me, so I thank him for that. But he said these businesses are, that one shop is their life. If they lose that one shop, that's it for them. A Tesco's, a Costa, a Pizza Express, they can afford to lose these premises sometimes, and it doesn't have as big an impact on their business. It's not shut up shop, forever for them. And so I do feel, exactly what others have mentioned, and maybe what Daryl said as well. These mom and pop stores, they are, when they can, they are going to pay, because it's so important to them. That one unit is so important to them. And who knows, maybe we'll see on the back end of this a little bit more flexibility from lenders to give concessions and better rates and stuff like that for these types of units and these types of tenants, where they maybe haven't necessarily before. We'll see lenders that up until now have really limited their lending to properties that have the larger names and brands in them on really long leases, and actually being a bit more flexible and allowing lending on properties where it is the mom and pop style single franchises. So it'll be nice to see if that's the change that comes out. But Tony, no, I'm not auditioning for Star Wars. Sorry, I've just got a really crap mic.
Thank you very much, Sam. I think that's a key point there for everyone to take away. Is the desirability of is the tenant type changing for banks? Is it now moving to smaller outfits? And are they actually getting the same credibility as a franchise or a slightly bigger organisation. I think that's a pretty key point.
Just to interject there, guys. So that could be a consequence, but actually, I'd probably a little bit disagree with Sam's kind of forecast there. I mean, that may well happen. None of us have a crystal ball, but I just think we're really not out of the woods with the whole mum and pop store style tenant. They will scrap for their lives. It's their livelihood. That's what they'll do. But some of these guys will struggle to trade, and they just don't have the same strength of balance sheet that some of these bigger corporates have. So as much as I agree with Ranjan around some of the language around how the corporates are treating their landlords at the minute, I still, if I was a betting man, I think the big corporates are more likely to survive this through all sorts of tactics than some of the smaller businesses that may well find that 3 months of no trade or potentially 6 months of no trade is just too much.
Mm-hmm. Yeah, no. Interesting. So moving on to Pamela. So Pamela's from an interior perspective, and from our last conversation, which was last week, I think she was still very busy. What are you finding and seeing in the market at the moment, Pamela, in terms of tenants and commercial property?
Thanks, Jack. I'm not really that involved in tenants as such. I've got clients who own or run homes and big establishments, so they're still wanting. They're still asking. We've got a book. Our order book is up for a year. We've got lots of work to come. The problem we're having now is supply. We can't get hold of our supply chains, or our suppliers can't get hold of theirs. We've got stuff organised, and we're still busy. We've got another 3, 4, 5 weeks of busyness, but that will slow down. In regards of tenants and property, that's not my expertise, my finances. So I'm going to put my hands up on that. I don't know, but work-wise for us, it's going to slow down. We're okay at the moment, but it will slow down. We will see that curve coming to us. Yeah.
So your clients who are tenants, is that tailing off now, or?
Our clients are usually they're not our tenants. So they are commercially they're investing in new properties. So that's still ongoing. They've still got the property, they've still got the build, they've still asked for help and support to design that and to fit that out. So we're still working. We're all home working at the moment, but we're still doing our designs for our customers, and we're still working with our suppliers very closely. So it probably will change, and we will see that curve, and it will slow down. But at the moment, people are still asking for the work that they've expected in the last couple of months. So it's still going through. Our work book is still fairly busy, yeah, at the moment. But I do believe that will slow down when we can't get our suppliers in.
Yeah, fair enough. Okay, so on to Ranjan. I mean, just your views. I'm sure you could take us on a pretty detailed and present tangent on this one.
Yes, I think I agree with Sam's analysis of the high street situation, and I also see what Daryl's saying as well. And I don't think the lenders are going to change their views on who is a good covenant. But I think the reality on the ground is that there is better value out of the mom and pop tenants, particularly ones where you have them on the lease as individuals or personal guarantees and they're UK homeowners. Because also with the bigger companies, we haven't looked at the CVA process. The CVA process is very unfair and allows people like Philip Green to sit on his £30 million yacht in Monaco and claim that Topshop haven't got can get a haircut on all their rents. And this is a process that the mom and pop stores can't avail themselves of. The other thing I would throw in as a little comment is that the way the government have thrown money at this thing is they haven't offered any help to the commercial landlord whatsoever. And many commercial landlords who are getting collection stats of 30% or less, if they have 60% or so debt, they will struggle to survive 2 or more quarters of non-payment. So what we will see is a lot more commercial property come to the marketplace for sale over the next few months. I see that coming from landlords getting into trouble over the next couple of months, but I also see that from businesses, owner-occupier businesses, and businesses on leases, where you've got to remember, the longer this shutdown takes hold, the harder it is for a business to come back. And then you've got to look at people's age and stage of life and whether they actually want to come back and want to put in that effort to come back and rebuild their store and their trade again. So we're going to see a lot more supply of commercial property come to the market. So one of my main aims in this over this last week has been to steady the ship and understand what cash flows you're getting and be quite hard-nosed with it. Because if we start as landlords basically setting ourselves up as a charity for coronavirus business victims, then we are basically eating into our reserves. We have worked very hard over these last few years and kept reserves in reserve. That's for our use, not for our tenants' usage, because there is going to be opportunity come June, July, and we want to have our reserves for our business to profit on that. It might sound a bit hard-nosed, but it's the government who are helicoptering cash, and they are sometimes helicoptering cash at the wrong direction. When we've got Costa tenants, there's a Costa franchisee has got about 30 shops. He hasn't paid rent on two of them. Now he's getting 20 grand per store as a grant. And places like Costa are highly procedural businesses. So they can fire their staff and retake any numpty in a few months' time and just give them minimum training and get them on board. Smaller businesses are not so procedurized, they're not so systemized, and they have to retain their staff and furlong them and all the rest of it. So it seems that this helicoptering cash has been fired at businesses who often don't need it. So I think I understand the view of being, I have a lot more sympathy for my smaller tenants who have supported us by paying this quarter. And if they have difficulty next quarter, we won't do a rent-free, but we'll certainly and see what we can do to defer payment. But I don't have any sympathy for the bigger guys in stores where we have alternative uses, which have basically capitalized on their strong sort of big boy position to send these standard letters out. And some of them have cheekily asked for it to be a complete rent-free period, which is madness. But I think it's important for all of us as commercial landlords to shore up our position in the main, understand exactly which elements of our cash flow are at risk and try to maximize our takings to limit the amount that we dip into reserves, because the reserves are basically the opportunity fund for getting some great cracking investments over the coming months.
Ranjan, I'm just going to move on to Suzi. Suzi?
Thanks, Brendan.
Okay, I've got some, I think I want to be practical about this. So having been a retailer and worked with retailers for many years, I would recommend very strongly that you talk regularly to your tenants. Obviously, it depends how big your portfolio is, but make regular calls and don't just call them now and then leave it, for 3 months or whatever. Be calling them monthly. And also, I would really strongly recommend, so I hear what everyone said about mom and pops paying, but they will have reserves as well, like everyone else, and they won't last particularly long. Some might not. The fact is, you want these guys to be around at the end of this. And, that's what this government's funding is for, is to kind of make sure that businesses are around at the end of this. And so we can all be hard-nosed, and, with some tenants, absolutely, we need to do that. But the first approach really I would recommend should be working in partnership. And you shouldn't just offer rent frees or kind of monthly rents rather than quarterly rents just willy-nilly. I would ask to see their cash flow forecasts. I would ask to see their balance sheet. I would really try and get some strong financial backing, because at the end of the day, you don't want to back a dead horse. You want to be backing a business that is sustainable into the future. If you don't think that they're going to be, then you need to think very carefully about, you really do want to try and get a quarter's rent up front and try and, kind of, shore up your reserves. The other thing that people should be looking at is rent deposits. So do you have any rent deposits you've taken from your tenants? Because if you have, there may be grounds to use those to kind of to pay the rent, if someone's not paying. I know, because I've worked in the industry, all the big landlords are being taught to by the River Islands, the Necks, etc. Smaller landlords will not be part of that. So you need to raise yourself up the pecking order with those big guys. So be phoning their corporate offices, kind of really start kind of trying to do relationship building. And again, follow the same procedures, ask for their cash flow forecast, etc. if you can. The other thing is that remember that forfeiture of leases, if the lease is within the Landlord and Tenant Act 1954, forfeiture of leases, i.e. getting the lease back from a tenant, even if they're not paying rent, is not straightforward. So you can serve them an order to get forfeiture, i.e. to get your lease back, but the law is very much on the tenant's side in that. So if they pay at the last minute, you can't get that lease back. Now, if leases are outside the Landlord and Tenant Act, that's slightly different. But just remember that forfeiture isn't straightforward. So getting that lease back isn't necessarily straightforward. And if that tenant goes into administration, especially at the moment, it could be tied up with administrators for 6 months to a year at least. And you won't be able to market that property, so you'll have zero rent coming in. So I would really strongly recommend that everybody works in partnership if you can, so you can avoid those eventualities.
I think that's key. Thank you very much, Suzi. That comment about the cash flow forecasts, I've written down. I'm certainly going to be doing with a few of my tenants, that we have to eventually paying us back, and it's a useful exercise, because it's the same with the banks. If the banks are backing someone with the government subsidised scheme, they also have to believe that it's going to be paid back at some point. Thanks very much, Suzi. So I think we have Jay sitting in the wings there somewhere as a super sub that's coming on to give us a bit of an insight on his views. So Jay, could you also do a bit of an introduction and what commercial properties you've been buying and what you're noticing and seeing with tenants?
Yeah, absolutely. Thanks, Jack. Thanks, Brendan.
Thank you.
My name is Jay Howard, property expert in terms of auctions. I've been buying and selling commercial property now for 18 years. First commercial property I bought was a funeral director's home. I was 17, and 9 months into the investment, the thing blew up. So I've experienced a fair bit. As I put in the chat previously, currently have a double-fronted commercial unit in Runcorn, just outside of Liverpool. The commercial tenant is a charity, and they're still paying and not reporting any real issues. I think there's been some really very interesting things that have been brought up. You obviously have the enigmatic style of Ranjan Bhattarcharya, calling coffee workers plebs, which has really lightened my Monday. Suzi, always with tons of sense, at the Commercial Property Summit, managed to share a bit of time with Suzi on the panel. Brilliant. I think it's absolutely correct. What you don't want to fall into, especially if you have larger tenants on higher capital value assets, is them becoming illiquid. Especially if it's franchisee or if it's owned in a subsidiary company rather than the main company, or they start becoming illiquid and start serving CVAs. So I think Suzi's point about making contact and making sure that you're on top of those kind of things, or even coming up with a reduced payment over the period to enable them to either continue trading or continue the tenancy. I think the note that I'd put in the chat was, there's been some talk about, having the mom and pops versus the national, multinational types. If you were to go back to the crash of 2008, you weren't getting these kind of issues because people were still allowed to go out, still allowed to by, and actually there were reliefs being put into the systems to allow that. You're not getting that here. So the real crunch is a brand new crunch that no one's ever actually dealt with before. I don't think it makes sense for you to change your strategy and go from Costas, for example, down to the gym will fix it, stores that sell plugs and light bulbs and things like that. If you have a transactional history on a certain type or certain asset class or certain quality of tenant, then I don't think that should change. We're dealing with really difficult times. What I do find interesting is you hear some very intelligent people out there, far more intelligent myself, talking about potentially seeing a drop in property values of up to 15%, which is not far from the rival of 2008. Now, where that leaves you in terms of your ability to, if it's coming up, remortgage or getting existing financed through, whether it comes down to how your asset is performing on a cash versus value basis, it all depends on how you own and operate. What I will say is actually I think this is going to be a really vicious bite in all of our backsides, but I do think it's short-lived. So it's about creating those relationships with your tenant where they don't become illiquid, where you're not moving into a position of you're either here and you're paying all of the money, or you're not and you're out. Because actually, although commercial tenants don't have the same rights as residential tenants, as Suzi was alluding to, it is not as black and white as you're not paying, you're out. I think it all comes down to, and I think this is something that's being considered nationwide, is that, be kind, understand that these are things that are affecting everybody. That's more than just a landlord investor perspective. These things are getting to everybody. It's affecting their business, it's affecting your business. There's a knock-on effect from that. It's affecting finance, it's affecting, so everything it's all knock-on. So I would voice tempering your approach and just making sure that you are maintaining as much communication and positive interaction with your tenants and any ancillary services that you have.
Thank you very much, Jay. I completely agree. I mean, there's lots of people out there that expect in these times they can just turn to their solicitor and say, what does my lease say? But this is where a landlord shows their skill and what they're doing to earn their fee and negotiate a structure that works for everyone. And if that's get rid of the tenant, it might be that. But it's, again, case-by-case scenario. Thank you very much, Jay. Hugely insightful. We will come back if you're hanging around. So you mentioned it impacts every element of the business, which is key, and all of us landlords need to know that part of their business well. So moving on to the finance part of what's happening.
Jack.
Yes.
Jack. Can I just add a bit on the tenant side here?
Yeah, feel free to.
Yeah, I mean, there's some chat going on about CVAs and how we liaise with tenants, but I think we've got to be realistic in that a lot of landlords have limited maneuverability. Certainly, some of the larger tenants are going to use this opportunity sooner rather than later to do a CVA or a pre-administration where they're going to be shutting down, I believe, the less profitable stores. And what hasn't been mentioned, sorry, can you hear me?
Yes, loud and clear, yeah, very good.
Yeah. What hasn't really been mentioned is the potential of empty rates on these commercial premises. And that's going to be a big issue. So where you don't have alternative uses, you've got forfeiture, sure. Do you really want to exercise that? Because would it be better to have a tenant that doesn't pay anything than have an empty store where you've got empty rates? I mean, we've got a situation where we've got a high street shop which has been empty for a good few months. So we're not collecting a very high 5-figure rent, and we're paying, I think, 35 or 40,000 rates. Now, how many landlords are going to be in a position to do that, especially if they've got borrowings? So I think looking forward, landlords have got to start planning, because it's going to get worse before it's going to get better. And if you don't shore up your cash or get your finances in order now, there's going to be some very, very difficult times. And as it's been pointed out, there's going to be a lot of these commercial properties coming onto the market as forced sales. If the landlords are not selling it, the bankers are going to make them sell them. Come 6 months, 9 months, that's what we're going to see.
I completely agree, and I think that resonates with what Ranjan's saying. And empty building rates is something that has to be considered. And for the listeners out there, that's if a commercial landlord owns a property which is currently tenanted, and the business rates falls under the tenant's responsibility. If that tenant now then leaves, that's the landlord's responsibility. So a key point there, Anil, which needs to be considered from what I think the reoccurring topic title is, case-by-case scenario, but also very evidence no. So moving on to the finance side of things, I know
Jack,
I've just got to dive off in a second. I think Ranjan wants to quickly interject. I'll give you a minute.
It has to be quick, Ranjan, because we've got to bring Suzi and Alex back in.
Very, very quickly on the my hard-nosed attitude is very much among the blue chips who I feel are conserving cash. And the other thing that probably, I haven't actually been through the process and forfeited a lease to date, but what I found very effective for David and Goliath situations where I'm the David is the CRA process. And that is a process where if you believe they've got the money, you can send in the can't pay, take it away guys. I mean, my best example of that is I had HSBC who didn't pay, and we sent bailiffs round with no court, just under the CRA process. They turned up to HSBC HQ, Canary Wharf, and we got paid within a couple of hours. So if you believe you've got a big name company, as soon as this moratorium is over and they're conserving cash and they've had all the grants, then you just go in with CRA and they'll take away goods from the store, basically. And that's something to sort of bear in mind.
Fantastic. Thank you very much, Ranjan. So there's been a quick question. TJ Atkinson said, could I start a business in my own commercial premises and then claim small business rates relief? Which you can. It's fairly straightforward with a bit of admin backed, but the small business rates relief can be done, but you have to be only paying one business rates for that business, for example, and it obviously has to be under the threshold of £12,500 rateable value. Second to that, I will add a caveat that there is a government grant going around currently that is dated so that you have to be paying business rates before a certain date. I believe it's mid-Feb. But moving on to finance. So Suzi, do you want to start us off on, with all of these moving parts currently, how can you see finance changing, or is it already changing, and how that may impact landlords?
Yeah, sure. So firstly, apologies. I'm going to have to run away in a minute, hence why Jack's come to me first. So finance, it's an interesting one, this, because in 2008, it was obviously a finance recession. It was a banking recession caused by kind of Lehman's, etc. And therefore funding switched off kind of straight away. All the kind of, we were kind of due a midterm dip around now, but all the kind of fundamentals of kind of borrowing and finance, etc., were all kind of very strong before this happened. So I spoke to a major pension fund on Friday last week, actually, and it was quite interesting. Their insight was that at the moment, like, everyone's in chaos. You know, the corporate bond market's gone crazy, everyone's dumping them, the Bank of England's buying gilts, you know, kind of the markets just don't quite know how to react. This is completely unprecedented across all sectors, but they're actually expecting things to settle down, you know, and not when this is over. They're kind of saying there's going to be like a new, everyone will kind of quite quickly adjust to, and the fact is that they will definitely be more cautious with their conditions. We've already seen loan to values go down, so even on buy to lets they're going down to 60-70% tops, and even the big guys are kind of saying, you know, they're going to take a more cautious approach. Rates may rise slightly, but the fundamentals are that finance was strong beforehand, and whilst the conditions may change, there's still a way to finance to lend on property deals. So you know, I kind of, unless something fundamentally goes wrong that I'm kind of not aware of, that there's still going to be kind of the market there's going to be lots of liquidity in the market. There's going to be lots of finance to fund transactions, and therefore I kind of have some confidence, and I may be completely wrong. I may look back on this in 6 months and think I was deluded, but I have some confidence that there will be a bounce back at some point. Now, it might take a year, it might take 2 years, whatever, but you know, there's nothing structurally wrong with the lending market. There's nothing structurally wrong in that kind of arena, and therefore, you know, whilst obviously prices are going to definitely plummet, without a shadow of a doubt, our midterm dip is going to be strong. You know, we're not due a kind of big depression for quite some time, and I suspect there will be some form of bounce back. How long that will take, I don't know, but I think that, and commercial property market, probably the final thing I want to say is the commercial property market has a history of bouncing back a lot quicker than the residential market. So the losses are realised a lot quicker because valuations happen a lot quicker, and valuers are much quicker to, you know, the pension funds, the property companies, they all get revalued a lot quicker. So you realise that the loss is a lot quicker, but there's such a weight of money that wants to come into the commercial property market, both from overseas and kind of internally, that actually the commercial property market does tend to bounce back quicker than the residential market. So again, there may be some fundamentals that may change in that kind of during this completely unprecedented situation, but I have some confidence that that you know, in the short to, well, probably the short to medium term, that things will recover.
Very interesting. I mean, everyone wants them to. The government, all the landlords want the funding to come back, and that's very insightful, Suzi, and also very key to know that your views are that the commercial bounces back slightly quicker than residential, which I agree with. I mean, businesses tend to be a little bit more fast move in terms of confidence before, you know, people start saying, you know, I want to move house and things like that once their business is a bit more comfortable.
I think it's worth, sorry, Jack, just worth just saying as well that we've not obviously seen anything where tenants on a whole scale basis might fail. So, you know, and obviously the market is very predicated on that. So I reckon we'll see money really kind of being channeled into food stores. You know, their covenants are going to go through the roof, and, you know, the real essential services. It may be that more property starts to become more secondary and tertiary because there's a lot of business failures. So we'll just have to see how that shapes out.
Fantastic. Thank you very much, Suzi. And do you want to share quickly how anyone can get in contact with you as you're diving off the call?
Yeah, sure. So please feel free to contact me direct. I have a website, which is strongoakinvestments.com. So all my contact details are on there. So if you'd like to contact me, please do.
Amazing. Thank you, Suzi. Stay safe and take care.
Thanks. And you,
Thank you, Suzi, for taking part. Thank you. David, we're going to move over to you. So we've had people, Jack, from Wales, Northern Ireland. I'm really impressed by the geographical spread of the call. So David is from Leo Prop Crowd. David, over to you.
Yes, good morning, Brendan. Morning, everyone on the call. Things have certainly changed, Brendan, since our cup of coffee in Northern Ireland a few months ago.
Yeah, definitely.
It's amazing. I don't think anyone could have obviously foreseen or planned for what we have. But just very quickly on the finance front, I think the property crowdfunding industry is obviously going to go through major upheaval over the next couple of months. I think some companies will absolutely fold. I think that's inevitable. They won't be able to get through this next 2 or 3 months. But others will adapt, improvise, and I think some will continue to do some funding. I think for me, the retail restricted investors, I think, will keep their money in their pocket. So I think most companies should probably focus on the high net worth and sophisticated investors. That's probably the best source of finance for property projects who are wanting to continue some level of business when that's allowed moving forward. So I think segmentation of investor databases is going to be key. And I think above all, it's probably communication with investors to find out which have the appetite to continue through this situation and which ones are just going to sit tight and wait. But I think undoubtedly, and I think Suzi mentioned this, you know, there is still going to be huge opportunities over the next couple of months. There'll be plenty of high net worth investors, sophisticated investors who love volatility, understand that volatility brings opportunity. That's mentally a strange analogy, given that we're obviously dealing with literally death and people losing their lives. But the reality is, I think it's Warren Buffett talked about blood in the streets. I don't mean to be callous by that, but it's just the reality of business. So there will be huge opportunities over this next couple of months, I think, Brendan.
Jack, anything to add before we bring Alex in?
No, I think that's key. I mean, there's a few people just already discussing opportunity, and I think it's good to put that as part of your strategy currently. I mean, in our business, it was 70% growth, 30% maintenance. Now I think that's swapped round for the time being. That's very good, and thanks for having you on, David. So moving on to Alex, from a surveying perspective, evidently you're close knit with the developer or the landlord and the bank, and you sometimes act as a monitoring surveyor between the two. What are you seeing is happening in terms of finance?
Yeah, cheers, Jack. And yeah, just picking up on what David and Suzi said, obviously I think everyone's still confident there is going to be some opportunities there, but it's from our angle as surveyors, it's going to be how we can facilitate our service under the current government guidelines, really. So it's going to be a question of how can we do our appraisal. We can do a desktop appraisal, but I mean, that has all sorts of insurance implications, PI implications, and I think it's going to have to be a sort of a creative and innovative way for sort of surveyors and valuers to speak to lenders and see how that risk can be managed between the parties, really. I think that it's I mean, we as a practice, we are still saying that on commercial property we can still inspect, but there is a large checklist of precautions that we have to take, and yeah, I mean, I can share them separately for anyone that's interested, but I mean, that's going to be the difficult part in the short term, and just managing that risk on those appraisals and the restrictions.
Interesting. So just team tightening up and everyone working together to conclude. Thanks, Alex. And Anil, do you want to add anything on what you're seeing? Probably a corporate perspective.
Jack, I don't think Anil's there at the moment. So
he's just
initially I said it was going to be 11, so we've extended it to 11:30.
We'll jump to Ranjan. Ranjan, do you want to give us a bit of an insight in terms of funding?
Funding is going to, in my view, for a little while, it's going to be a cash and private equity investors. So I'm looking at opportunity, but that's more from working with private investors and building those relationships and people like that. Because a lot of people are very, very keen to get involved, but would rather do it with someone than necessarily on their own. The other thing about opportunity, I mean, of course, now is the time we're going to see who just puts Warren Buffett quotes on a slide and who actually sort of action and acts on the thing. But there is a very important thing about not catching a falling dagger. We've got to kind of let the dust settle a little bit, and I think that settling dust will happen in about a month or so. I think it's going to be very brave to look for opportunities, say, this week, because I think the dust hasn't settled yet. Mm-hmm. It's important to allow that to happen before looking for opportunity. I guess that's where I stand on funding and the opportunity.
I completely agree. I had a conversation with someone this morning discussing about timelines and when to find motivated deals. I think most agents are still getting used to working from home and not really working on any other deals other than maybe ones that were due to exchange. So the real opportunity in the motivated deals are to come in the weeks, not in days. Jay, would you like to add anything on specifically funding from your perspective? Evidently, you've got to be pretty hot on funding because being an auction specialist, you have less time than most of us.
Well, yes, actually, funding for us has changed drastically recently. One of the largest and most prolific bridging funds have stepped away from the market, so together have stopped lending. Now, like with most lenders, so any opportunity to not lend anything in a tertiary market is something that they're very keen on. But the speed at which they exited was remarkable. Obviously, when you're operating at the bottom end of the market, and I say the bottom end of the market in terms of like the auctions being like the base of the triangle in terms of property transactions, it's just interesting to see how they do that. I personally very rarely use finance. That doesn't make me a very popular person. I normally use funds from private investors, high net worth, that kind of stuff, or my own cash reserves if I have any available to deploy. That makes my approach to property investing, even at a time like this, quite a boisterous approach. I think I just mentioned in there that the Allsops commercial auction is tomorrow. I mentioned that because I've been looking at a couple of opportunities in there myself. On top of that, it's worth mentioning that Acuitas auctions have cancelled their March auctions, so you can see there is a real divide in how they should proceed or progress their transactions. So yeah, in terms of finance, I've got to start using it more often, but at the moment I tend to just profit share with a cash investor. It tends to be quicker, and the relationships I have are far more sustainable and far more friendly than I think is out there commercially in the marketplace.
I think we're all a little bit jealous of that there, Jay.
Is it possible to bring in Will?
Yeah, so Will Stokes, we've just been doing a few private messages there. We were discussing before this call that one of the hardest hit sectors of commercial property is serviced offices, and Will specialise specifically in serviced offices. So Will, do you want to give us a quick one minute intro on who you are, the project that you have coming along, and what funding changes you've noticed, if any?
Yeah, sure. So for those that don't know me, we do serviced office space and co-working. So looking at taking primarily just commercial units, but a blended mix of a little bit of retail as well, and repurposing into serviced office and that kind of co-working piece. We early days, I mean, we met with Daryl, which is good. Daryl's got some good understanding of that funding kind of network. But early days, we couldn't get a lot of funders to get their head around it. So we ended up going down a private investment route, which has worked out. And subsequently, we've had conversations with Daryl, and in the future, we'll look at flipping out on some form of product to create some form of debt in there. The market definitely from a customer side has been hit, as Ranjan was mentioning earlier as well, most definitely. What we're looking is just progressing as much as we can. You know, the stuff that we had tenants that were due to move in on the 1st of June, we're now just trying to work through with those guys and create solutions, which is why I really resonated with the bit Daryl was saying, the whole kind of work with your tenants piece. So we're just trying to absolutely conserve cash as much as we can, trying to make sure the contractor's prepped and all the back end stuff's done. So the minute they can go back on site, they've got an 8-week hold off. The minute they can go back on site, they can blitz and just progress all the back end stuff. That gives you a brief update.
There you go. Similar with Jay, really. Will's gone down the avenue of private funding, and it's currently paying its dividends. And I would imagine that you're probably paying a bit more than debt or any sort of mezz finance that's blended, but in reality, you're slightly more secure and less exposed in positions like this.
Yeah, it's a bit more expensive, and those guys don't get. I mean, none of our private investors are too scared off. We're really proactive. You know, we're constantly sending updates. We're constantly saying, look, this is what we're doing to counter this problem, and this is how we see a solution forward. Whereas what I tend to find, I mean, I've used, I won't mention who, but I've used a particular bank for development finance on apartment development. And the minute that was kind of getting towards beyond timescales, we were kind of 2 months over with that due to contractor issues. And they started to get a little bit tetchy, and they were, you know, they weren't going to pull funding, but they were saying, look, we want to put you on a different product, whatever. You don't have that with the private investors as long as you remain that communication channel. You know, they roll up their sleeves and they're in it with you.
Interesting. Thank you very much, Will, and do give us a shout if you want to jump back in. So really interesting insight on funding. I think we've touched on quite a few points. Is Mr. Norkett still knocking around somewhere?
Let me just, yep. Hi,
I brought
Daryl.
you in towards the end because I think you can shed a lot of light on some of the topics which we've chatted about in the funding perspective. But it would be really key, and obviously we'll mention you there to sort of understand your understanding moving forward.
Yeah, it's been a whirlwind of a couple of weeks in my life actually, and a lot of things have changed. So there's kind of a few things that I'll kind of talk about. But I mean, to start off with, I'll just kind of offer some practical advice. And a lot of people have already touched on this. But if for deals that you're in now, so live deals you're managing, so whether that's a development deal that you're going to need to continue drawdowns on as you go forward, or whether that's commercial mortgages where you're worried that you may struggle with the repayments because of non-payment from tenants. It's communication. Don't bury your head in your sand. Talk to your lenders and communicate. It makes the world of difference. And whilst the government hasn't been explicit around saying or encouraging banks to offer mortgage holidays for commercial landlords, I would hope many will be sympathetic. And the other thing that the high street banks in particular have done for many years is capital repayment holidays. So not quite as good because you've still got to pay the interest element, but if you're on a high street style capital repayment mortgage, that can still do a lot of good. And sometimes they'll do capital repayment holidays for an extended period of time, so even 6 kind of 12 months. So communicate and think outside the box. It's not always just about jumping on the government solution. Sometimes there are other solutions with the banks anyway, for times of stress and times of difficulty. Then sort of picking up on some of the points around that Suzi made and Jay made about the market kind of coming back quite quickly after this. So I'm probably in the middle, probably sit on the fence a little bit and how I feel about this. So arguably commercial property values have less distance to fall than residential values do. So if you look at the values of commercial property now as opposed to 2007, they're actually broadly flat. So commercial property has taken a very long time to recover in terms of capital values, a very, very long time. However, the value of commercial property is really underpinned to the rent that it can achieve. But the reality is the more businesses that survive this crisis, the more businesses that continue to trade, and the appetite for other people in the country to set up new businesses will create demand for spaces. Those spaces might be office, they might be industrial, they might even be small retail spaces, but where those kind of new business sectors emerge and that business sector activity emerges, that's where you'll see the recovery in the commercial sector, and you'll probably see other parts of that market fall more quickly. So I do fear that this kind of shock will accelerate the fall of large retail, for example. It doesn't mean retail is going to disappear after coronavirus, but it means that the decline we're already seeing as a result of people eating into cash reserves, particularly those businesses that are relying on only making a profit over Christmas. You've got to get to Christmas first. That's a struggle anyway. It's going to be potentially double struggle this year. So I think we'll see some decline in the fall of capital values in the retail space. But equally, there'll be other business sectors that emerge out of this and create opportunity for landlords. On the sort of residential side, I do worry about capital values. There is further to fall, and I think it could be a longer, more extended recovery than just a few months in that market. The residential property values are really underpinned by buyer demand, and buyer demand is underpinned by their ability to borrow a mortgage. Don't worry too much about that actually, but 2, their desire to borrow a mortgage. And that's the bit I worry about, which is confidence. It's a really strange crisis in that we're focusing very much on the economics today, but it's also very personal. Lots of people will know someone that suffers from this illness, and that might knock their confidence to borrow more, do more, and all the rest of it for a period of time afterwards. And you need to feel safe in your job. So if you don't feel safe in your job and you don't feel like you're going to get your bonus this year or your pay rise next year, whatever it might be, you're more reluctant to take on more debt. And really it's debt that fueled the growth in residential prices. So I think I'm expecting a correction in residential. Who knows how big, who knows how long, but I do think there will be this year falls in values. Then specifically on the finance really follows all of that stuff that happens in the market. So there's 2 types of lenders out there now. So the first one is institutional and large private lenders. So Jay mentioned very famous, largest example of that type of lender really, that runs a lot of the auction purchases. And that's also the world that I'm in now with LendWell. And the issue in that world really is just appetite to put money into property at a time when people are struggling to gauge exactly how long this is going to last for and how it impacts on the quality of their securities and the quality of those property assets. So that's why you've seen lots of lenders pause new lending or reduce LTVs in the short term. I feel pretty confident about that sort of funding in the medium term. And by medium term, I mean 3 to 6 months' time. And that's because something that Suzi touched on, a lot of that money is actually pension fund and hedge fund money. So at the moment, there's a flight to cash. All of those guys want cash because they don't know what's going to happen. And that cash just enables them to hedge their bets. But they're also going to want to redeploy that cash sometime soon when the market looks a bit clearer. And I think that property will then look like a much better bet. And that means that bridging lenders, development finance, all that kind of stuff will start kind of coming back. The banks have a slightly different problem. So the bank's capital reserves have been built up, and hard fought over the past decade, specifically to prepare for this sort of crisis. So I expect the banks to continue to lend, but they'll drop loan to values. And I expect the banks to be a lot more forensic about every transaction. And the reason for that is there'll be less appetite to do new business. What I think will happen at the banks is they've got much larger books. They're much more exposed to property in general. So what that means is that as landlords, or if some landlords get into financial difficulty and can't afford to pay their mortgages, which looks like it will happen for some, then the banks have more credit risks. The more credit risks they have, the more capital they need to hold on their balance sheet in terms of what their losses are expected to be in the future. And it's a bit of a kind of self-fulfilling cycle where more capital's held back just to manage potential arrears and bad debt on the book, which means you have less capital to deploy into new business. So you see a kind of general tightening of liquidity. So to kind of simplify that down, I think bridging development finance, rocky in the very short term, but probably will bounce back pretty quick. Bank mortgage style finance will be steady and stable, but I think the days of 80-85% mortgages are done for now, and we need to sort of realign expectations at 70, maybe 75%, that kind of thing.
Really, really insightful. So for all the listeners out there, basically start amending all of your stacks and your perceived loan to values for banks at slightly lower levels. And if you have any questions, do contact Daryl. He's extremely useful and, more importantly, knowledgeable in that field. Ranjan wanted to touch on a point in terms of serviced offices. So we'll bring Ranjan in for a few.
Yeah, just pick up on Daryl. Absolutely excellent analysis. I couldn't agree more. I think the other pressing, what that also highlights is, going back to something that Jay's mentioned as well, the value to be had by working with private investors. Private investors with cash have a massive problem right now. The problem they have is that the government have two ways of paying for this crisis. One is to tax us, and there isn't enough time to tax us and get the receipts in quick enough. The other way is simply to print more money. So to basically tax us another way by making every pound we have worth less. So if you have a pound, then you really, if you don't want it to be worth less in 1 year's time, you've got to put it in something that appreciates in value. And if you have got a credible plan to present with people with that cash, they're all ears. So I think from a financing perspective that the bridges and the lenders, particularly for commercial and development projects, will have less of an appetite, and it will get tougher to go through the hoops. And fostering those relationships with private investors is going to be key to exploiting the opportunity that's going to emerge in the coming weeks and months. I really believe that commercial property will take longer to recover, because I think there's going to be massive oversupply. A lot of the slow diminishing of business models, which are now becoming sort of less and less viable, have just been cut short, if you like, by this shutdown. So there are going to be a lot of businesses that simply won't resume again. And then there'll be landlords who will have to sell those assets because they can't cope more than a couple of quarters, no rent. So we're going to see more supply come to the market. And where I see the opportunity is this. I see that residential development is virtually ground to a halt. No one's really interested in doing much more in this crisis period. There's still a massive shortage of starter homes. And if you can take a commercial asset which will be in oversupply, and you can buy it cheap, and you can convert some or all of that commercial floor space into residential space and make starter homes out of them, you will be switching a commercial asset to a residential asset, which is a little bit more liquid, a little bit more saleable, and be able to take private investors who have amounts of cash and be able to offer them a solution to kind of hedge against their cash being inflated away. Because I think that's going to be the opportunity to focus on in the coming months, taking oversupply of commercial assets and looking for PD ways, permitted development ways, to transfer as much of the floor space on into residential, and put that on the residential market, whether it's to let or for sale, but creating starter type entry level accommodation. On the serviced accommodation front, I think the biggest challenges for people will be who have done, serviced office front. The biggest challenge, the people that are stuffed are the people that have done it on the rent to rent model. If they are stuck with 10-year leases with landlords and they've got a chain of them, a small chain of them, they are. The landlords who have done serviced offices will be the best place to weather the storm and come out and fill their units as we get through this crisis.
One little comment to throw in there, Ranjan, and to not contradict exactly what you just said. I completely agree that there's a hell of a lot of exposure in serviced offices currently, but what you also have is one of the, I mean, you'll be familiar with marketing and sales. You have to envisage the end user knowing how they do that thing. And if you have companies that are 150, 1,000 persons strong that are not able to afford to buy or own a large office space, and now 100% of their staff is working from home, flexible desk space is going to be popular. You can't ignore the fact that we've all learnt now how we can do 3 days at home, and a business could actually run an office of 100 desks but have 500 staff, and it would just be hot desking. So there's, to a certain degree, even though it's very exposed currently, and that everyone sort of, if a monthly subscription to an office, they're going to jump out of it now to reduce their overheads. But if you own it, you can't jump out of that lease. So to back to that point, the world has become better at flexible working, which does help co-working spaces. So it will be interesting to see how that does pan out over the next few months.
That's a really good point, Jack. Sorry, not to jump in. Ranjan, it is a really interesting point. And I think in terms of the lease stuff, I mean, our model is 50% lease, 50% owned. And it's all about the safeguards. So, you know, we've got protections in place, breaks at 3, 5, 10, that you're not going to get from a typical landlord. The landlord we go after is a valuation play. It's more, you know, a landlord that's sat on a dying retail asset that can introduce cash for CapEx, you know, for Cat A fit out, we'll do Cat B, we'll then get them a better valuation based on our covenant, and it works like that. And with that, we can bring in safeguards that you wouldn't traditionally get if you just went to a, you know, commercial agent and said, I want a 10-year lease.
Yes.
The flip side to that, Jack, is the bit you just mentioned, which is all the space that we do, and you'll be the same, I bet, Ranjan, it's movable. You know, we can scale down the co-working to more serviced office, or we can scale up the co-working, you know, to less serviced office based on what the market demands are. And I think what we are going to see is that, you know, the guy in London that's got 500 staff in one office and has just been hit by this has realised that actually his staff can work 3 days from home. But after a couple of months, they're going to realise that working from home gets mundane and not great. And they're going to support them to go into serviced office and go, well, we've got 30 guys commuting in from Reading. Why don't we have a satellite office there? We've got another 20 coming in from St Albans. Why don't we have a satellite office there? That's the way I think the market will go after this. But I think it's going to take 6 to 8 months for that to be realised. But I think in the long term, it's going to boost the flexible workspace.
That is exactly what's happening. And I think that's going to be accelerated, because it's all very well working from home. But if you're in a 2-bed new build with no dining room, with no spare bedroom, and an open plan kitchen lounge and 2 toddlers, it's virtually impossible. So what we've seen is that companies are paying for their staff. They actually pay for the co-working space, or for a couple of staff to have a small suite in our business centre. One of the things that I'm looking at doing right now, in fact, is making sure that when we get back from this, all our meeting rooms will be fully configured for video meetings, because I think people have suddenly got used to this whole Zoom concept in a way that people never did before, and that's going to stay for good.
I think if you were to take a look from a high level, and you've got Will on this call who does co-working space, you've got Ranjan who does mainly mixed-use property, you've got myself, which is more development focused. I think that the key there, and I've got a friend who's a very successful hotelier. The key there is to have a plan B or a switch. So Will doesn't go into his development saying, I'm going to produce A, and that's it. And if the market changes, I can't do anything with it. He's thinking about the adaptation. And that's when, in times like these, creative developers or landlords or commercial developers really see the light, and they can say, well, actually, I've got this other option, so it doesn't matter so much. I completely see that from a more high level, and has probably resonated with a lot of the listeners, no matter what sort of strategy they're doing. So maybe if there was a serviced accommodation provider that could have flipped it into short accommodation for the healthcare market, that may be something they could have looked at from the outset. So we've touched on what I believe most points in terms of finance. I believe Brendan would like to bring in
Kirsty,
Kirsty,
are you still there?
Some light for the listeners.
Are you still there? No?
Yeah, I am here, sorry. Hello?
Hello.
Kirsty,
Hi.
we can hear you. Crack on.
I haven't got my video on, so you'll just have to listen, I'm afraid.
No problem. We're all ears, no eyes.
Well, no, this has been really useful. It's great just getting together, so, and I agree with everything that's being said. Just one thought that I had when we were just talking about retail is that a lot of private investors do tend to focus on retail when it comes to commercial investment, but let's not forget the other sectors. So we've just had a good conversation about offices, about industrial. So industrial is the winner in all of this out of the three major sectors. So there are more and more businesses going online. So even before this happened, we had a lack of supply in industrial. Developers are speculatively developing, and it's flying off the shelves. And that isn't going to change. In fact, it's only going to get better. So a lot of people are focusing on their online businesses. Some people will move to an online model as a result of what's just happened, all of whom will need warehousing and logistics space. So industrial development and industrial investment is a really good space to be looking at right now, and to diversify your portfolio into if you hadn't already, because the rents are going to be going up and only up in industrial. That was my thought.
Nice. We haven't touched too hugely on industrial, and I love it because it's not sexy. For a lot of people don't like going to the industrial realms. So Kirsty, as we didn't have an input from you earlier on the call regarding tenants and finance, did you have anything else to add, maybe with a little industrial twist on it as well?
Okay, so I think I agree. My background is very similar to Suzi's, but I also agree with some of what Ranjan said. So it's definitely a partnership, it's a relationship, it's have a conversation every week, make sure the bigger tenants know who you are. Yes, they're going to use the fact that you can't do anything for 3 months, but have your strategy ready and be asking for their accounts and their cash flow forecast. It's not an unreasonable request, and be tough if you think it's appropriate. The smaller businesses, so for me, most of my tenants paid the March quarter rent. Some of my tenants pay monthly, and we've agreed they'll pay late in April once the grant comes through, because they're all claiming small business rates relief. So again, this is a bit about strategy. It's a bit about focusing on convenience and service-led retail, and as Ranjan said, buying in the right location, because I know I can do other things with those units, or I will be able to re-let them in the short to medium term. Industrial, they have no excuse whatsoever on the whole for not paying their rent. So their businesses are continuing. They've all got massive government support. Yes, you might ease their cash flow on a monthly rent, but really they are not in the same position as retail. So it's about relationship, and you should have this relationship before this happened. If you didn't, this is a lesson in the fact that you can't be a commercial investor and not have a relationship with your tenants.
Very key, very key. Have a relationship with all your tenants, and you'll be closer to abreast to what's going on. So I think we're running short on time now, but I would love to finish on a positive. So if we could rattle through our panelists and have a 10 to 20 second opportunity view on the market moving forward, so that we all finish our call today, but our week starts on a positive. So we'll start with Alex Hurn.
Yeah, so I'm just going to reiterate what Kirsty said, really. I mean, I was speaking to a fellow surveyor from Lambert Smith Hampton last week, and he was saying there are a lot of short-term requirements for industrial space from the likes of retailers and suppliers that obviously on e-commerce that are still doing really well. So this is the short-term, if anyone, well, this is the short-term space really for opportunity.
Fantastic, thank you, Alex. And I think Anil's jumped off the call, so we'll move on to Mr. Norkett. Daryl?
Yeah, I think the main thing is we're all very much focused in crisis management still right now, but give it a few months and the classic buy low will be back. I think there'll be way more opportunity out there, and there'll be a lot less competition as people are spooked. So for those still in the game, recoveries are good generally.
Thank you very much, Daryl. And we will move on to Pamela.
Hi guys. Yeah, I think what's really important is a community, having people together, and Brendan's done this. He's got us all together. We are together supporting each other, and that's really, really important in these times. And also planning, make sure you get your planning right. So once you've got your planning right, you can do so much. So thanks, Brendan, for getting us all together, and let's just stick together and keep sharing.
Thank you, Pamela. Very key. A problem shared is a problem halved. Ranjan?
Yes, great, Brendan, for pulling us all together. Opportunity. I think one of the biggest opportunities is going to be direct-to-vendor marketing. Commercial agents and auctions are going to have difficulty getting out there and taking on listings over the coming weeks. And we all know, because it's fairly widely publicised, some of the larger tenants who have not paid their rent this quarter. So it's not that difficult to sort of basically use some direct-to-vendor marketing letters, send a few out to landlords and see whether you get a response. I think they'll be very receptive.
Fantastic. Thank you, Ranjan. And one of the key notes that I have here is, if the government doesn't support commercial property owners, get your CV out to Costa as they employ numpties. Thanks, Ranjan. So moving on to, we'll have a quick review from Will Stokes as well. Will, are you still on? Or is he dived off?
Can you hear me okay?
Yeah.
Yeah, great. I think you're absolutely right. I think once this is out the way, we're going to see a boom in the market. I think, especially in serviced office, and it's about being ready and prepared. It's all about having a service that you can offer and working with clients, customers, whatever, understand that we're all in this together and move forward that way.
There we go, fantastic. And all the best with your project in Reading. I look forward to seeing it. And final person other than Brendan, Jay Howard, positive note?
Yeah, positive. I see a lot of potential with permitted development on commercial property, whether that's on the high street or secondary or tertiary. I really do like industrial, so I was really happy to hear that brought up. I think the opportunities are going to be really very clear. The market has already started to slow and it's become difficult for quite a few people. If you are able to position yourself correctly and structure things in the appropriate way, I think there are plenty of opportunities out there. Maybe not on next week, but certainly in the next 6 to 9 months, absolutely.
Amazing. Thank you, Jay. And Brendan, have you got any final words?
Massive thanks, Jay and Jack. I say Jay because Jay's helping me on Thursday evening, contributing to the questions for the quiz. I've never done it before. Property quiz. So open to contributors as well. So there's at least 7 rounds.
Brendan, where can we find out details of the quiz?
That will be on. That's a good question, Jack. It is on Eventbrite at the moment. So
will anyone that applied to come on this webinar get an email?
That's a good question, and the answer is yes.
Good.
So look, so that's this coming Thursday. I'm open to ideas as well. I just want to say a massive thanks to the panelists, because I have to admit I didn't know who we would get on at 10 a.m. in the morning. I've done, my regular Thursday evening for Thursday, which Jack was on, and Daryl. But this is a slightly different call, and it's amazing that the geographical spread, as I say, not just London-based people. Not talking about the panelists, but talking about people who weren't even on the panel, Wales and Northern Ireland, which did surprise me somewhat. Jack, I don't have any final words. Anything from yourself?
No, I think the main takeaways were communicate in the group. All property and tenants should be run on a case-by-case scenario, but in most terms, keep an open dialogue with them and assess your risk and maybe your plan B on the asset. They're my main takeaways. And stay positive in the group, and there will be a point in a month or preceding a month that there will be opportunity out there. So start to think about that too.
Thank you.
Thanks very much, everyone. Have a great weekend, and hopefully see you on Thursday for the quiz.
Thank you.